everything was looking good for Bajaj Auto. The stock was doing well, numbers were coming, demand was looking robust. But then your quarterly numbers, your guidance, which in a sense surprised the market, that where the demand and where the demand trends are moving. What forced you to come up with a slightly cautious guidance along with your quarterly numbers?
Well, partly I would say it is a hypersensitive audience. What we had said at the analyst call is that and this is, almost verbatim, that it has been a slower start to the season. And it was, the industry was at around 5-6%. It was a very muted exit from quarter two. Quarter one for the industry was good. Quarter two was a bit muted. And then there was a slower start. But we had also said that more and more one is finding that the last few days, particularly around Diwali and Diwali regions, can swing it. And that is exactly what has happened. So I would say we are still on course for what we had said at the beginning of the financial year, that we see the industry growing at about 6 to 8% in the fiscal. That growth being driven by the top half of the industry, which is the 125cc plus segment, which should be in double digits. And therefore, obviously, the 100cc segment a tad lower. And our primary focus being in the top half, we should outpace that industry. I think we are absolutely on that trajectory. And in fact, the season has turned out to be quite a smashing one.
What has become a very large stay for Bajaj Auto? While we've discussed rural India, we've discussed 125cc, you've spoken about demand in terms of the Diwali, Dussehra impact. Where is the export demand headed? Are things looking better? Because that, in a sense, is a sizable contributor to your total kitty now.
Yes, you could. Again, the export trajectory is what we have been saying, that we are seeing every month, every quarter, an improvement. Every quarter is 10% plus better than the previous quarter. Every month has been better. Largely driven by, Latin America growing very strongly, things getting sort of improving, but still fragile in places like Nigeria. To give you an example, we sold retailed 22,000 units in Nigeria in August, 25,000 in September, and 33,000 in October. So you can see that trajectory. And why I'm saying fragile is because these currencies are shifting around quite a bit. So till the time there is some kind of equilibrium in the currency markets, the situation will be fragile. But it is on an improvement path. And that is why you see our exports growing. If you take year to date, you will see that our exports have grown by 9%. But if you look at it in terms of value, the revenue has grown by 15% in the same period, which suggests that there is a better mix, which is driven by some very strong performances coming out of Latin America, parts of Europe, and parts of ASEAN like Philippines. So when you put all this together, we feel that both from a mix, volume, and revenue point of view, there will be a steady improvement in export. There may be a month here and there because, there is also seasonality in overseas markets, particularly around the winter months. But for sure, the curve is pointing upwards, as it has been for that. But I don't expect it to suddenly, zoom up. It's been a steady growth for the last 2-3 quarters. That will continue.